Today we're going to be looking at this strategy here, which 160x the account, 1,200 trades, and the best part is it had a 77% win rate. So if that sounds good to you, don't forget to like the video and subscribe. But we're going to get straight on all of the indicators behind this actual strategy. I'm going to dissect these strategies so you can see the ins and outs of every single indicator without overwhelming you with all of the emotional roulette of actual manually trading. We're going to automate everything. Let's get straight over to my computer. Let's have a look at the indicators and what's behind this strategy. But before I go, guys, don't forget that I'm going to be giving away to a random number of users a random amount of USD from the comment section. Tell me down in the comments below what is your favorite strategy, the indicators involved, and you may be in a chance for winning in the next video. Right, let's get over to the indicators and what's behind the strategy. Okay, so as you can see from the backtesting results, this strategy looks absolutely amazing. I'm going to move myself slightly up here so you can see the actual equity curve. Appreciate the actual slope towards the upside, absolutely incredible. We have 1,604% net profit, a total markdown of 26%. So if you use a little bit less leverage, you can get that down quite easily. We have 1,236 closed trades. And with a big asterisk, we have a 77% win rate. I will talk a bit about this in the future at the end of this video. Okay, let's get over to a nice clean chart. I'm on the 30-minute time frame. Let's start adding the indicators so you can understand what is behind this strategy and how it works. First indicator that I'm going to be adding is the SuperTrend. The SuperTrend by Everget, it's this one here. It's free and open source. It's downloaded by 10,300 people. Deserves a lot more love, so go and download the SuperTrend, very powerful indicator. So the SuperTrend is going to give us our trend direction. As a Markovian strategy developers, we're actually just looking at one candle to decide whether to trade or not. We don't care about behind, we're not looking for divergences or anything like that. We just want to be above the actual SuperTrend and for it to be green for us to take a trade on that candle. So what we're going to do is we're going to remove the buy label and the sell label, and this is now giving us our trend direction. Next indicator we're going to be adding is the Waddah Attar. Now I've spoken about this one many times on the David Tech channel. It's this one here by Lazy Bear, 2,900 downloads. I'm surprised it's not a lot more. We're going to click on that and the Waddah Attar is going to add this indicator here. I'm going to go into the settings. We're going to be using the explosion line here and we're going to turn it white. We're going to make it a lot brighter so we can see it here on YouTube. And we're going to be going back to the chart. Now, the Waddah Attar is a kind of a histogram developed on the MACD. Said that I was going to bring you some indicators which were better than the MACD, so you can delete the MACD off your charts forever. Well, this is one of them. As you can see, when we break above the actual explosion line, we're looking to confirm our long entries. So this one here would actually have got in right on the same candle as the SuperTrend actually converts over to long as well. Right, the next indicator, which is going to be our second confirmation indicator. Here on David Tech, like I said earlier, we're actually looking to build strategies on indicators. We're only interested in the current candle we're actually trading, but we do backtest our strategies as far as we possibly can. We have one indicator for trend direction. We then have two indicators for the confirmation of our entry. And then we have an indicator that's going to tell us whether there's enough volatility or volume in the market. And then finally, we have a stop loss or a take profit indicator, which is going to set us our stop loss. And then we're going to use risk to reward for our take profits. Okay, here I am back at the charts. Our final indicator, which is the brand new indicator, which is this one here. Algodic Oscillator. It is a free indicator which you'll be able to find on the David Tech website by going up to the top here and clicking free indicators. I list all of my free indicators here that are open source and totally free of charge. There are a couple of closed source ones in there as well, but most of them are open source, including this one. So I'm going to be adding that indicator to the chart as well. Boom, just like that. Now I've added lots of options to this actual indicator because it is extremely powerful. The Algodic indicator has multiple ways of getting into the entry. The one that we're going to be using today is the MA cross. A bit like the MACD, it has two lines. It has the Algodic line here, and then it has a moving average. When that crosses, it's going to confirm our entries. We're going to remove the cross only. We're going to remove the histogram because the only thing that we're actually looking for is the Algodic MA cross. As you can see, it looks pretty powerful when the moving average crosses over the Algodic and it is above the Algodic line. We're going to confirm our entries. As you can see, the indicator has actually confirmed all of the other entries that we got. So we're going to be getting in on this candle here, and we're going to be setting our stop loss to the ATR bands. Not spelt like that. Bands. Boom. Okay, the ATR bands, we're going to set the ATR bands to 2.5. Just like that. And we're going to set our stop loss just there. We're then going to be looking for a risk to reward of 1 to 2. Boom. Okay, as you can see, that was an absolutely perfect entry. But there is one thing that we need to talk about. This strategy actually is a multiple take profit strategy. Now, this is great for reducing drawdown and for anybody that likes a higher win rate where we set the stop loss to break even as soon as we hit one of those profit entries. But the problem is when we're on TradingView uses each and every one of those entries and includes it as part of the win rate. So it does kind of give a bias to a higher win rate. So technically it isn't a statistic we can trust, but it isn't really a statistic that I actually look at much anyway. I'm much more into profit factor and drawdown and obviously the max amount of net profit. Drawdown is very important. I trade a lot of bots, so I try to reduce as much as possible the drawdown, and profit factor just helps us to see whether or not our trading strategy is profitable in the long run. Max number of trades, as long as it's above 200, I'm happy to trade a trading strategy as long as it's been forward tested. Right, okay, so now we've actually gone through all of the actual strategies. I've already been through the backtesting results, but I will go through some of the other results on deep backtesting. So without further to it, let's get over to the backtesting results. As I said earlier, this trading strategy has 1,604% net profit, a max drawdown of 26. Now, as it is using multiple take profits, we are using quite a lot of leverage. We are using dynamic leverage of up to 30x leverage. But obviously, we are making sure that we block any trades where that liquidation line is below the stop loss or above the stop loss, depending on whether it's long or short, meaning that we won't take any trades and get risk of liquidation. As I said earlier, we are using multiple take profits, and we can reduce the max drawdown by decreasing the amount of equity in every single entry. But of course, that's also going to affect the amount of max profit. Like I said earlier, the best idea is to diversify your portfolio, add as many bots as you can possibly, and feel comfortable with. This will diversify your portfolio, reduce the max amount of drawdown, and it also will help with the FOMO of wanting a trade every single day. Okay guys, getting over to the fun stuff. Let's roll the wheel of fortune to see how many people are gonna win. Good luck everybody. $150. Let's go over to the comments. Okay, we're going to be giving away $150 to a random comment off of this video here. Let's go! Crypto Trader G, congratulations to you. You just won $50 for commenting PDF, please, sir. That reminds me, guys, don't forget, if you want my PDF where you have all of the instructions on how to build your first bot, also what is actually behind all of my strategies and the logic that I've built, don't forget to comment PDF in the comments down below. And I also have a free school where we're going to be building our first bot in the first lessons. So don't forget to check that out. It's absolutely 100% free. All you have to do is click on the links down in the description. I'll be adding all of the indicators to this free section here, and if you're interested in bot trading and trading any of the David Tech bots, you can see them all transparently on the website here, and you can simply copy them by using the copy box function on the actual website by clicking copy. Okay guys, I hope you enjoyed that one. Have an absolutely wonderful day. I look forward to seeing you in the next video. I hope I'll manage to do 3 videos like I did in the past every week, and hopefully some new strategies and different ways of passively earning money. So without further ado, have a wonderful day. Take care, keep safe, trade like a boss, and I will see you very soon. Goodbye.
Come on, David, and once again he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD.